Tough times in the stock market, but don't worry, Tradespotting is here to swaddle you with the world's most comfortable hoodie. Get yours at unreasonable.shop. Now, we're going to look at some tickers. I'm feeling particularly ambitious. I think it might be the red. We're going to look at AZ2, Pandy, Chewy, Triple M, Tesla, PayPal, RockU, Tyson, QuantumScape, UPST, AHT, and ENPH. As I say, particularly ambitious show then. We're also, today, separate video for members, check it out on the member side or my Patreon, looking at 10 stock that will improve your portfolio between now and the next 6 months. You will enjoy the video, you'll benefit from it, and it's my new approach to helping those viewers who support the channel. Thank you very much. If you're one of them, hit the like button. Some of these came from fax requests, which I really appreciate. Others came from people who needed a little bit of help, and I really appreciate you. So let's crack on. AZ into the weekly time frame to start with, and we'll begin by looking at the trend, where we can say that there has been these three highs. We put in a level of horizontal resistance, followed by a downtrend. That downtrend could be marked out with this resistance line across the top side. As you can see, the little bit of a change on this push to 250. We can see that that came in line with the lowest low in the previous trend, a high, which like we were talking about, broke that downward sloping diagonal. So the linear trend was then in question. We then found a higher low, which means that the overall concept of the downtrend is in question. Price action then pushed back up again, putting in a higher high and higher low and higher high in sequence gives you an uptrend. You'd be looking for support. You found it in a linear fashion, third touch of this horizontal, which also marked support on this downward sloping channel, which has encompassed the most recent range on price action. 50 simple period moving average in here at the prior weekly high. If you break out of this formation then, the next area to target would be the prior monthly high. So you're looking for a move from 169, 172 up to 2.18, 2.20. If you can manage to break through those levels, the question becomes, are you on for continuation with regards to the uptrend and another touch of this potential diagonal in at around 386, which would also be where you meet a horizontal level of resistance, a high within the previous downtrend. So this would be an important area to look to on the charts in at around $3.90, $4. And perhaps you're thinking February and around Valentine's Day, that would be when you're hoping for this trade to come true. It may well be that you take profit in advance of that, and price action could be very volatile and a break to the top side, so it could be a quick move. That's the weekly time frame where you can see that immediately price has a lot to do. It has to break above a 50 simple period moving average at 1.73. Current price is 1.60. So despite it's already putting in 8%, it needs another chunk more. If it breaks that diagonal, the next horizontal to look to on the short-term time frames in around 190. Break that prior high 220 and those other targets we talked about. So down to the daily time frame now, while the charts load up, this downward sloping resistance that we talked about could be mirrored in price action's next moves back up again to the top side. So it may well be that you see that symmetry in the move also reflected in the Fibonacci levels you target. Here is the charts now loaded then, after that slight delay, pardon me. You're looking at, as I say, price moving back up, forming a mirror to what we saw on the way back down again, at least in terms of the formation that drives price action, a parallel channel. If you are talking about moves back up on the short-term time frames, you've got confirmation that 180, 198, and then 233, very important levels. Break those, then you'll be on for targets to the top side of this formation. And I'd say that 3.90, that's a very strong target with a lot of eyes will be on, and there'll be a lot of activity comes in at that because of the previous price action at this level and where it marks a sensible level to take profit based on current price action. So that's what I'd be looking to. I'd also be cautious of all of these Fibonacci levels on the move to the top side. 236 being confluent with the 382 on the dominant fib for the move back down again. I'd say that 2.40 then is a very, very tough area. And if you are looking to manage your risk as price moves up again, I'd say that that prior high at 3.4, that's a strong area to look to. I'd say that that area where you will see a lot of volatility extends all the way down to 233. And so if price pushes beyond this level, I'd expect to see a couple of ding dongs either side on support and resistance within this box. And then if you get a break, target up at around $394. In advance of anything further, I think that's quite a healthy trade. It's approximately 100, 120%, depending on how you manage the trade safely. I think that's well achievable margin on that move. If you want to manage your risk, then you have to go down even further. The problem with this particular stock, with a market cap of 55 million and the daily trading volume of only 58,000, is that it's very, 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 very small and illiquid and could be then prone to huge dumps or pumps. Go down to the 4-hour time frame, you can see already that price is very volatile on these time frames, in that you're loads and loads of gaps, and the candlesticks come in very barcodey fashion. You know, the ups and downs, quite dramatic there. You're looking at 213, all the way down to 143, move back up to 240. Nothing happened in the trend. You know, no support or resistance was broken, didn't break any important Fibonacci's looking left. This is very volatile and can be very difficult to manage if you're on the wrong side of the trade. So I'd be cautious to use a stop loss. On a 4-hour time frame, you don't have a secure trend. You do, of course, have these higher lows, lower highs, and you have a potential W in terms of a bottoming formation. So there's a lot of potential here, but you're in a negative formation as price action pushes back down. Price hasn't proved itself to be bullish at this oscillation. And so it could well be that you're looking again at tests as low as 130. It's a significant chunk off price action. And I wouldn't even necessarily say the move was over if it came down and tested 120 again. I would want it if I was entering this without necessarily determined to take the trade, but I'm very happy to do so if it came to me. If I just met this chart now, I'd be looking at entries around 125 with a stop in around 1.18, or perhaps below in around $1, just underneath there. Try to get my entry as close to $1 as possible if I was determined to make this move to the upside, in which case you're potentially getting a 400% move on price. If I didn't take the trade because I just met the ticker, then I wouldn't regret missing out on it. If you did manage to then, if you're looking in, you're already in, you're in profit, you want to see where's the latest pullback, where do I put my stop? I think if you get it back towards 1.40, you'd be doing well if you're already in significant degree of profit at that stage. The basis line within this channel and the 50 simple coming together give us confluence. So if it is to push up from this level, I'd say that's very positive, because it would represent a higher low and you'd be going on a higher high would take you above the top side of this channel now. And it's very possible that happens. If it doesn't find support here and moves down, I don't think that's as significant for the trend. I think you would likely find support bounce back up again and test these targets at 170 sort of levels. So it's very possible a breakout from here. I'd measure that as a move above 170, 180. Break above the 200 period moving average at 1.95, then you're on for those higher targets. I expect it to take a while, a little bit of resistance at 220 to 230, and then you'd be targeting higher side of that box that we talked about. So that's the breakdown of AZ Smart Technologies Corp. Technicals to be aware of in the context of very small market cap and the potential for this thing to make then very big moves in short periods of time. It presents difficulties with managing risk. If you're looking for big moves over the period of time that are above and beyond manageable a trade or this would be an approach vector for a trade you could manage with a stop loss along with those take profit targets that may evolve into something bigger up towards the rocket crop flash at 6.55. Pardon me. And the reason you'd be looking at that is because of this hourly chart. Now, with the breakdown in price action and the terrible barcoding and the very difficult ability to get in on any of these moves at safe areas does tend to cloud the picture and would put a trader off looking at this on the 1 hour compared to the clarity we see on higher time frames. But you can also see here that the structure of price action, I'll just draw this in briefly here, that you had this obvious breakdown here. and price action completely collapsing. This retracement since gave you the potential W bottom. And if you're looking at breakouts above this level, above 450 especially, you're back testing a golden pocket, pushing towards a 786. This important horizontal here, where price action spent a while going sideways, that's a very big area to test. Even if you're looking for confirmation of the bearish thesis and breakdown, bears were perfectly happy to short it here. They will be so again. And if you're bullish and you think this is going to break up and test higher levels, top side of that area is in at around 685. You'd have to be very, very bullish because you've got so much volume to go through there from previous price action. You'll expect there'll be people happy to take the trade either side of it there. So a lot of activity. If price action breaks above that level, above 685, huge moves. But I'd be managing in that trade, keeping something on the table and trying to target those 6 spot 80 sort of levels, or at least the flash. They're on 4 hour 6 spot 66. Rocket outcrop flash in at around those levels if I'd managed to get into that trade and stay in profit. So that's AZ. Next ticker we're looking at is HUBC. Cybersecurity. Again, small market cap, 59 million. Average trading volume, 15 million. So that's a significant proportion of the market cap being traded each day. But that market cap's still tiny, really insignificant. Stop doing that, computer. Right, so strong moves, tweezer bottom, potential for an inverted head and shoulders if it does come back down, which would also be a test, not just of this previous level of support, but a golden pocket retracement. In order to get there, you'd probably be breaking the positive structure within this trend and a 50% retracement all the way back down. So that's not fantastic. The prior weekly low coming in at around 0.5 gives an opportunity if price makes it there. But then you'd have to wonder if this upward trend is actually intact, because these highs coming back down again from where it has found a rejection, this being the monthly high, that rejection taking us back below the weekly and daily high all the way down. So because again, this is the nature of these stocks with the small market cap, so small, and it's only been in existence since March this year. There's so very little that you're going to be able to do reliably on this compared to a ticker that's got a longer price history and greater volume and a bigger market cap. So you're looking at risk then. Managing risk is the name of the game in all opportunities, and this one in particular, because if you're talking about potential payoff from a trade, that all of that depends on the cost to enter and manage it. And this one comes with a high cost across the board in every one of those aspects. So do you want to reduce that at inception? So you're looking for it to come and test that 50 simple or the 200 down at 0.46 or 0.5, those sort of levels. That's what you want, in which case, again, the trend's in question because you had a high, you had another high. This itself is not enough. You need to have a higher low, which you haven't had because your most recent low was a lower low. So, because this is a low, right, we're able to define that as a low because prior to that there was a high, which gives us the definition of the trend, which itself has 2 existent points, the beginning and the end, right? And here's a low, here's a high. So this high itself we can define as high because again before it there was a lower low. So and that gives us the trend. And we don't have that here. This is a lower low, and this moving up and testing this high, you can't say this is a higher high within the trend. You can only say that the trend itself is ambiguous, and that speaks to sideways price action. So I would be looking at this thinking potentially you've got a little bit of sideways until the market gives it some acceptance. You definitely haven't seen market acceptance yet, primarily in terms of its market cap, but also in terms of any trend. We've not seen an established trend here, and established meaning something you could rely on that goes for a couple of years. Obviously, it's not been around that long. Right, so a breakdown here could be continuation like that. So the risk is that this thing isn't going to survive, and that's not been proven otherwise yet. Test then back at around 0.5 would be the first way to manage your entry. It's already below a 236 at 0.64, and it's seen a 13% move down today. Speaks to the volatility gain. So that's what I'd be looking at. I'd want to manage that risk at 0.43. That's a huge percentage move already. So I'd have to have a really strong edge that was dictating my entry reasons. I'd have to be using a candlestick entry. I'd need my stop loss, and I'd need to move it immediately after the entry started. So then I'd also be waiting for the point of the highest volatility. Again, judging that on a stock like this is tough. So you would have to be doing it with implicit understandings, having watched this ticker and concentrated on it. So it's a very like focused trade, unless you've got some essential information about this company, which will make it really difficult for you to exploit this to the best of your ability. And it makes me think you could probably do better on a different ticker. But if it is that you've already bought it, or you're looking for an entry because you know something I don't, then 0.5, you don't want to be taking this below 0.43, because it'll probably then go to 0.33, and how much of a loss are you prepared to absorb? Not even that much. And then if that doesn't hold, you've got a gap that it should probably fill in at around 0.26, at which point it's a 0.786 retracement on a move itself that's not completely broken the trend. It's not established a new trend. That'd be a dramatic fall away, and it would be scaring lots of investors. It wouldn't be the sort of chart that a lot of people would be interested in trading. If we go up to the daily time frame, we can see that 50 simple period moving average coming in at 0.4. A test of that having gone through it wouldn't be all that unusual. Sure, the price could keep going up, and the 50 simple itself could follow up to these levels, but it doesn't look like the price is going to hang around waiting for it. So very dodgy, very tough. Down to the 4-hour time frame, you can see that 50 simple in at around 0.52. You can't see anything that looks like it would catch price before that, because even the nature of this trend, the highs within the previous oscillations, they were all in at around that important horizontal, which price is already below. It's broken this diagonal. It's not confirmed any uptrend. So if you are looking to buy this and you want to make money from it, it's very rarely in these areas. It's very often in these areas, and that's the biggest distance. So that's the trade to take, unless you've got some information I don't. So that is HUBC. Now we're on to Pandy. This is Pandora. They are a Danish company, so you can buy them. Well, on Pandy. Why did I say that? It's because that's what Flasher asked. Okay, so very strong trend here. Very strong move to the top side. A little bit of a warning flashback down there on a 4-hour daily time frame. You can see that move has been sustained for a while. It's coming back to test the previous highs. Positive moves, but putting it in context, we see that this has been a sideways price action. While it's gone through a big range, obviously, on the daily time frame, the trend, when it's to the top side, is quite clear. It finds a strong level of resistance. It comes back down again. You'll be looking at defining this with horizontal levels between these two areas. You could possibly tighten this up because the trend has been in motion for so long. I would probably move that guy up a little bit. The most recent lows on this chart that are significant are as far back as November last year. So I think we can use that guy, tighten this up with the prior high from the previous oscillation. You can see we're obviously closer to the top side. So it's very simple take when we first look at this chart on the daily time frame to say that it has been oscillating between these two horizontal levels. And as such, the risk is that when it's at this high, it'll come back down and test these lows. That's been what it's done previously. And so within that cycle, you're perhaps looking more to buy it at the low areas and sell it at the high areas. Obviously, you want the trend to already be in motion to reduce your risk. So you're looking to buy it at new highs, which themselves are relatively low compared to historical price action, and sell it at further highs. So buy at highs and sell at even higher highs. That's the trick with sensible trading, tickers like this, which you're just approaching. That's the daily time frame. Weekly, I don't expect to see anything different. Price action moved up to these levels. This is where people see value for Pandora. As the market cycles, this thing will be going up and down with it. Daily time frame, significant in history, giving us weekly, daily, and so on with the moving averages. 50 simple above the 200. This most recent high, little bit of a push up recently there. I suppose it broken this oscillation. Looking left, you could see that really there's nothing left to aim for apart from back up towards 900. Another 70 to 80 bucks then. Potentially looking at a 10% increase across a reasonable period of time for Pandora. Down to the 4-hour time frame there, price action first. You've got your flash back to the bottom side of this channel. This is really helpful, and it's very, very long-term sensible trading with Pandora if it's part of your portfolio. You see you had a previous flash up here, showed you that this hadn't yet completed. You were going to get a proper touch. And then when you departed this zone, you got a proper bottom information that left you with inverted head and shoulders. That point of the impulsivity in price action at this point could, of course, be now dead and gone, but I expect it'll come back and be tested. You'll see Pandora back at around $400 again. So while I do think that there is a significant 10% move to the top side left on Pandora, it could well be that you're waiting a while for that to express itself fully. Opportunity cost quite high, but who's going to scoff at 10%? Not me. How do you manage your risk? We want to have a stop in at around 795. You definitely don't want to be holding this below 756. If it does test that low, it's probably going to go further and come down at 690. I expect, having seen price action do what it did here, you could easily see a fake out from this thing, drop back down, test the 786 and move up again. I don't think you necessarily need to adhere to this diagonal trend line, but that would meet the idea of prices making a slight retracement. I could totally see that happening. Recent earnings from these guys expected to be 6. Estimate earnings revenue 5.46. What does that represent compared to the previous? Still, they had a disappointing earnings with a surprise negative 10%. Revenue was up. Earnings were down. Cost optimization, name of the game recently. That's interesting. Dividend yield 1.97%. So they've got good things going for them, but they lack the fundamentals that make them a compelling investment opportunity right now, based on those ratios that you would determine with regards to dividend yield, market cap, and so on. And while it is in a positive trend, and I do think that that's the right direction to be targeting with this thing currently to the top side, it could well make a retracement back down of approximately 10% before it expresses a move that's another 10% from here to the top side, and you find resistance at 900 or 950. At which point, I don't think I'd want to be involved in this thing at the minute, because there'd be an awful lot of people that are looking at sideways price action, expect it to come back down, test 390. Long-term rocky outcrop flash at that area obviously means that it's going to be filled eventually. So I'd be looking at taking profit on this judiciously as it moved higher. And the compelling trade on this is, in fact, a short trade from 900 down to 400. That's the biggest percentage move. And its easiest place to manage the risk is up at around 950. If this thing does start putting in blow-off tops, giving out a proper reversal formation, much the same you saw at the bottom, please tell me. I'll come back to it. I'll look at it, and I'll be very interested in covering it again, because I think that's the compelling opportunity on Pandora. And if you're looking to find out how to trade it, it's because it's a Danish stock. You'll need a broker that can trade across international markets, access to Danish stock exchange. So IBKR, pretty sure you've got my affiliate link, Flasher, who requested that one. So now we're going on to Chewy. Recently had its birthday. Big moves back down again there. We talked about the potential for this thing retracing down as low as this previous low. It's made it to that area. Should have come back and checked it. When was that? March. Okay, so big moves on Chewy since we've last had a look here. We do expect there to be volatility. Okay, very interesting in this. Right, so we'll go up to the weekly time frame, turn off the drawing so we get a fresh look. Interesting. Flash up at $30, and we have some extra information that came through with the fax message. Minner, looking at the yearly lows, entering in at around 16.66. There's a lot of divergence, but you mostly find that on the higher time frames. Breaking the 236 at 21.74, which you see there, would be a lot of interesting information. There's a gap to target above, apparently. I'm not seeing it on the weekly, obviously. That would obscure that greatly, but a gap and a flash. So the 236, the gap and the flash. This is the weekly time frame, and it's Chewy's birthday, and it's a fax from Minner. It's a total legend. Right. Chewy. So this is a downtrend based on the highs, lower lows. Ah, for goodness sakes, get out of my face. Right, so what we're going to do is I'm going to get a fresh chart up of this guy. Whoops. Okay, so fresh chart, fresh look, and we're going to completely and utterly take Chewy apart here. Sorry, Chewy. It's his birthday. I mean price action. Downward slope and resistance. We're going for this as the dominant aspect of the trend, which has dictated prices pushing lower. We could draw lines underneath price action here, but I don't think that that'll provide all that much information. As you can see on the weekly, there's a flash at $30. There's also the golden pocket, a 50 simple period moving average, and the linear resistance from the diagonal trend, which is the dominant feature of price action since February 2021. So a very strong and compelling reason why price action would find resistance at $30. I think this is a fantastic picture on the weekly because it gives us a really clear area of why you would need to get out of that trade at that area, and the concept of, which you'll often hear Rocky and I talking about, at that horizontal level, risk will change. Okay, what was it saying? That's shorthand for saying that Rocky and I have looked at a chart and you get the same compelling feeling that you must be getting looking at this thing. Price and risk all meet, risk and reward meets at $30. Beyond that, it's somebody else's opportunity who believes in a trade that's broken that downward slope and resistance, right? Somebody whose trade is not defined by the things that your trade is defined, Pierre. Your trade is fantastic and it's defined by this line. That's how you're trade. But at this area, $30, especially if you've taken it all the way up from 16.16, which it looks like Minner has, then anyone would think, I am fantastic. I was so right. This trade is so good to me. How could I abandon it when it's been so good to me? And you'd feel compelled to hold on to it with the idea that it's going to go miles up, right? But that's someone else's trade, right? That's someone who waits for it to get to this area, has a strategy based on only trading when it gets there, and has a very good reason to enter, and they'll take it up again, right? That's a completely different trade with a completely different risk profile, and that's why $30 is a fantastic target on this thing. It's also an extremely large percentage move. Completely unreasonable, right? Completely unreasonable. And why Minner has other levels along the way where he would take profit. Those clearly on the weekly time frame have very strong confluence. This 236, very important level. You can see it there at 21.74. It has confluence with this previous low. So if you're going to work, this trade might not just go straight from those lows straight up again. Of course it could do, in which case, well done, Minner. As well as the money you made, deserve kudos for calling such a clean, crisp move. But it's also true to say that it's very likely at that 236, some people take profit. It's a huge percentage change from $16 to 21, $5 on something that only costs 16. That's very unreasonable already. And so the same idea of the risk changes and the trade changes means that it's very sensible to have a stop following price action if it breaks above those levels, because it comes back down again, you'd question it, and or a take profit target at that level so that you can make the most of any oscillation which approaches that area, comes back down to your entry. Why not take it again? It was compelling the first time, it made you money. Now you can do it, and that which you would have lost from your stop loss, maybe that profit you've already made. So it's a free trade for you. Fantastic way to manage your portfolio over time is with taking profit early, regularly, but not everything, so that you can pay for the move and the trade. So you're looking at the 236, 21.74, prior low. That's previous support, so likely future resistance, and why it's important to have a take profit target there. If it does break above, you've got the prior monthly high at the 382, which is at 25.75. Another important place to take profit. But Minner says there's a gap down on the daily time frame. This is where they're most significant, where we find most significant gaps. And he's right, there is. The low comes in at 25.96, also where we find the 50% retracement, and we close that at $27 on way to the golden pocket. I think very much that you would go there because, as you can see, again, prior support, now future resistance, okay? Also at the 236, so, sorry, golden pocket. That's what you're looking for. That's fantastic. Your definitive aspect to the trade now, if you're watching this video, feeling compelled to enter Chewy, then you're looking for it to break above $20 and find support around 20 spot 45 before pushing up. Manage your risk at that point because it could come back from 23. So the lower side of that gap, 25. A brilliant trade there. A brilliant setup. Great heads up there from Minner. I think everybody would be interested in looking at this thing just so you understand what we're looking at. If you're desperate to enter it right now and you want a stop, then I'd be waiting for something like that, breaking above 50 simple on daily, pushing on up, then targeting top side. Careful to take profit at these targets, as Minner identified. Fantastic. And this $30 flash from Rocky Outcrop, get that indicator at www.patreon.com/Rocky Outcrop. One tier to rule them all. You'll also get access to the Discord. Trading serious game. For serious people. If you want to do well at it, you're going to have to commit to it as if you would a real job. And why would you expect anything else? And in these real jobs where you get paid lots of money, you now need to spend a significant percentage of your life being educated and paying through the nose for it. So I'm very much aware of the massive benefits and value that you're getting from that indicator tier. And if you're serious about trading, I expect to see that to be part of your journey. That's why I put effort into you. That's why I invest my life in you so that you'll improve along the ways that benefit both of us. Of course, that makes sense. Now, don't betray me. Work with me, because that's how we as a team will become one of the best trading teams in the entire world. I'm serious about that, and a lot of people making good headway already. Rocky Outcrop's Flash, Rocky Outcrop's Patreon. You know the journey. We're on this together, right? We're on this together. Right, that's the weekly time frame. Chewy, everything's very compelling. Down to the 4 hour. Manage our risk on this thing. I mean, I wanted to make the point about the 50 simple up at this area as well. There's a lot of different things going on in Chewy's chart, which would suggest you take profit there. I think we're quite clear about that. Thanks very much for that, Fax. And then also, we're going to look now. Oh my goodness gracious me. Imagine you managed to take that trade and it followed it with a stop loss and it went all the way up to 87. 87 bucks from 19. What is that? You might have found from Minner on a Tradespotting show. Let's see, just take it there. If you look at that on the 4 hours, makes sense. Just a 338% move. Oh my goodness gracious me. Right, so you're getting your values worth at this one, eh? Good shout. Doesn't necessarily mean it's going to go there in one straight move. No, that's one other reason why you want to be taking profits. A lot of people will focus their entire career trading one ticker, exploiting maybe one in every 10 moves, and they won't be taking it from the extremes, be taking it on this really reliable, low-risk area, chasing continuation in a trend. And you can make an awful lot of money doing that. Right, next is Triple M. As it loads up, a lot of news recently about Triple M in their forever chemicals and acetylene lawsuits. So potential liabilities being covered there. Huge payouts, but that price has adjusted for that potential. So you're looking at here's these trades that we talked about before. Still, it's true to say that you're waiting for price to recover back up into the $100 level before you're taking this thing up to around 195, 40% plus trade there. I could see that working out. Is that the same targets? At a short position. Oh, this is all the different potential opportunities that could be presented by Triple M. Okay. Wow, we did get a lot on this guy before. Don't want to delete these because it could be useful and put in context. Plus, I share these charts with an indicator tier on my own Patreon. And if people are still relying on historical information here, don't want to take that away from them. Right, so you're looking at this, and it's quite obviously that there's, in most recent times, say for the last year, downward sloping diagonal resistance across the top of price action. That's where it's looking to get back to and break before anything definitive happens. There's also, on the daily time frame, 200 period moving average. You can see that halfway back towards your prior high on that same time frame is the 50 simple period moving average. And you've got a W bottom at the minute with resistance and a neckline on this formation, 236 at $91, right where price is at the minute. So if it breaks from here, the next target is 95. That's a significant percentage move on Triple M. 90 to 100 is the target. 86 for a stop loss. $4 off 90 was 5, 6, 7%. That's a 5. That's a significant enough stop distance to your stop loss. I'd want it tighter. I'd want my stop at the 236. I'd want it at 91 spot 21. If I'd already entered and I'd got a better entry than that, then I'd equally so I'd be putting my stop in profit now. Don't mind if I get hit and taken out of that stop in profit, especially if it means I can take the same trade, exactly the same trade again shortly after. So I'd be looking at that, moving my stop from not 86, but 91 spot 21. It's up 1.47% today. So if you did have your stop at 86, I'd move it up now. I'd also be cautious of this thing breaking down because, as I say, significant negative downtrend. Most recent touch of the 200 period moving average was an emphatic rejection followed by lower lows. So the downtrend is very much in motion, and there's a rocky outcrop flash down to 75 spot 64. So I don't have faith in this thing making a breakout from here. No way. You're right to be taking profit at 100. I wouldn't be adverse to taking profit at 98 spot 35, nor would I at 95. I think that's the trade. I think the stop at 91 spot 21 is the idea. And you've got down here daily and the weekly time frames. That's the daily. What are you seeing on the weekly? Positive moves. Potentially you're talking about divergence between these two lows. I would anticipate there is a touch of divergence there because it's such an extensive and consistent downtrend that you would anticipate that. Maybe there's even 3 touches of it here. I expect that's what you're potentially talking about. You've got this harmonic, which evolved into a potential, is that crab as well? So you've got a lot of reasons why you come back and test this area, but nothing necessarily why you would break it. If you are looking at that in terms of divergence, I can understand why you would see it there. I don't think that it's the be all and end all. Divergence on the weekly time frame doesn't necessarily talk to us the same way it does on the daily. If we're looking at it on the daily time frame, back here, yes, I would anticipate there would be one touch between these most recent lows, and that gives you the impetus to test the top side of a downward sloping resistance, because shorts don't necessarily want to get trapped on such a huge company. There's a gap here that it filled and then slammed back through. So this is obviously an important area for price action to test, along with everything we've already said. There's going to be historical price action and lots of different trades in at around $100 that are trying to manage their positions, which I wouldn't want to be fighting with or playing with. I'd get out of that at 98. That's what I'd be targeting, 98, not 100. Maybe I'd move a stop loss up to that area if it did break up in case of the potential for it going higher, because Triple M will come back at some point to 195 and put in a far bigger move. So that's what I'm thinking. If I drop down to the 4 hour, not getting any new information there. Lots of different gaps that hasn't completely filled. So I'm really not confident that this thing is going to break out emphatically to the top side. 15 minutes, you've come close to a rocky outcrop flash. The next one's up at around 92.64. That speaks to the opportunity to get a stop in profit. This is also a very good trade. The entry would be in at around 90 spot 78 now. The prior weekly low, 50 simple period moving average, a gap fill and 236 on the 15-minute time frame. You'd want to have a stop then in at around 90. I mean, we were talking before about moving a stop up to 91 and change. If you already have your trade in, it's already in profit, why not take profit there? Like, it leave you with a wash trade. You won't be able to enter it again. I see what you're saying. Well, depending on what the restrictions are on your account and what type of profile you will have as a trader, if you've not entered yet, I'd wait for a test of 90 spot 85, maybe even as low as 90 spot 50. I'd want my stop at 89 spot 40, and I wouldn't be jumping in immediately again to re-enter if that all failed and it got to 88. I'd be waiting. So that's what I'd be looking for. Caution, waiting for it to come back, test 90 spot 80 or 90 spot 50. If I was compelled to enter it now, it would be because I was targeting a rocky up a flash out at 92 and change. It's already moving its way there. It's doing it as we do this analysis. I think that move's already started. I'd be looking for the retracement and a positive reaction. You could even pause and watch it positively react and make its way back above 91.96 after a test of $90.50. At that point, you'd be confident about a move back up towards 98.99. Flash up that area as well. Jeepers creepers. This is a real good one. This is another excellent trade here. Thank you very much for that, Minner. Let me know if you've got any other questions and I'll try my best to answer them. Fill in some more on Triple M. Now, on to Tesla. So we did a video on Tesla recently, which was about the potential for a drop, and clearly we saw that come to fruition. 4 hour, let's see how bad it was. Yes, so fantastic trade opportunity here was the shorting of Tesla from 259. Target could go as low as 184. It's made its way down to 195. It's put in a touch at this stage that I would say is very significant. If I was looking at this thing and short that bounce, which managed to even open a gap and price action moved back above a 236, I would have been very cautious about the potential volatility moving back up and testing this area with what was going on here. But it's happened now. On the 4 hour time frame, price action is back up at what you would expect to be the fake out zone. You know, this is what Tesla and any stock likes to do, right? Markets chase liquidity, and as price broke below this support level, it then came back and tested it again, and as such there was an awful lot of trades and market participants willing to try again from something that had already previously worked out to the tune of down to 195 from 220. So a significant percentage move. It was obviously going to be shorted again. It's also true to say that when this thing broke back above a diagonal resistance level, that was the next horizontal to go and test. Some people would have been looking for a move to a 236. That will have happened pre-market, and then itself taken as a positive confirmation throughout the rest of the day, which is today, 4 hours, up 5.62%. But sure, didn't the news say that the EV market was dead? It did. Probably around here, at the low of the move. Probably in around where we were all taking profits. Right, so 4 hour time frame. This is still not good for Tesla, right? For a start, you're going to have to come back and fill that gap. It's obviously going to happen. Also, I would say, yeah, I mean, that's the area to look to. If you're bullish on Tesla, the entry is at 205. If you're bearish on Tesla, breaking below 205 at this stage isn't that significant. This is the area that was significant, and we've already broken it. It was at 212, despite the fact that we're back above it now. It already broke, and so I don't think that this bottom side of this gap at 205 is the be-all and end-all. So let's go back up to the weekly. We'll also try this with a slightly clearer picture on the charts. 200 period moving average, 50 simple period moving average, and a potential death cross on the weekly, with price action approaching from above, having put in rounded top, potential Adam and Eve. This is just as you look at W's on the bottom, that's a clear M on the top. Looking left, it's tough to see with all these drawings. Looking left, that's the important horizontal from the prior trend. It's not broken. Okay, so we'll start again with fresh drawings here on Tesla. The important, interesting parts of price action to look to are the prior resistance here. Will it act as support? Well, price action is currently testing it. A bounce off that wouldn't be unexpected. It's also where we find the 50 simple and the 200 period moving average on the weekly. Meeting either on the weekly time frame would be cause to manage your risk to the downside, which could lead to a drop off in the selling pressure, and then that would alleviate the pressure on price action, pushing it up a little bit, or at least letting it rise a little bit. So I don't think the fact that it's risen up to 217, 220 areas is positive. I think it's simply indicative of those people taking profit and reducing the risk that were previously short. Daily time frame, you've got a flash back up at 225.95. That would represent a recovery of the 200 period moving average. That's very positive, but price action, while moving that way today, isn't trending in that direction because of the lower high. With a gap, it was perfectly happy to get back and test the lower side of, you'll notice here, at the next lower high, which again put in gaps. Only filled on the next attempt at what ended up being a lower high. So it's very clear you've got 2-3 touches on that diagonal time frame, diagonal line. You'd likely experience another one should price action move there. A 236, which should also provide resistance in at around 250. Before you get there, you've got the top side of a gap to fill at 242 and a 50 simple period moving average. It's above the 200 period, and price action having come below that 200 and testing back up again would be bullish, but only so bullish in that when price action reached 245, the question being, is it going to go on any higher? Would be, well, it recovered from below the 236, so we can, the 200 period moving average, so we could at least go back up on test what's already established with 1, 2, 3 touches to be an important diagonal. So that would be the question from 245. Does it make its way to 250, 255? Not does it break up again? And so I'd be taking profit at 244 if I was long, if it even got there, with fully understanding that it could push to 255. Market would get excited again, and that would be when you'd see it dump. I can see that price action has got this gap that we spoke about before. Prior daily high is not going to be enough of a reason to hold it if it's a continuation of a downtrend, which is already in motion. This flash target is a very important one. At the bottom side of a gap, I wouldn't expect that gap to be filled the first time price action meets it, even if it is coming after the back of a break of a 200 period moving average. 4-hour time frame with more detail then. Sorry, delete these drawings. Jeepers, doesn't want me to delete them. Okay. So, I mean, this is a continuation of the trend line. It's already from before. Put it on there just to make sure we get it at the right sort of angle. Though the exact location of these things isn't important. So, there's going to be a touch of divergence on that, but it's not enough of a compelling reason on its own. You've got a 1 hour flashback down at 172. It's very difficult to think that Tesla is going to break this trend when it's got such obvious artifacts below. So it does like to work with the Rocky Out flashes and the interrupted flash, I see. This is a fantastic way to make this trade. Recently then, you can see that this would be the guy you'd be looking to, 172, and that would provide you with a potential entry back up to 279. So long term, the best trade on the charts at the minute, as provided to us by the Rocky Outcrop Flash, would be a test in around 170, 160. It makes such big moves, such big oscillations. You only need to double your money 9 times, starting with $1,000, and you'll end up with over a millionaire. Imagine how we could do if we could turn like reams and reams of yous into millionaires. And really, I love everybody who's ever watched me, so come back and watch again. Right, so Panda Chewy, and don't leave. Right, Panda Chewy, you'll only end up learning if you stick around. Right, so what did we get to next? Where's my list? What's the question there? Where would I put a stop on Tesla? I would put my stop on Tesla now at 211 or 200, 211, 210 spot 50. If I was desperate to keep it for that little bit longer. I would definitely not want to see this thing break below 205. If I was in profit and I wasn't stressed out about position, 205. If I was and I was worried about overall my account and what this impact of it, I'd have it at 210. And I definitely wouldn't want it below 194. That'd be on its way to 184, where you could just pick it up if you were still determined to hold it no matter what. And at that point, it probably does bounce and come back up and test 250. I mean, that's the target short term. Biggest trade is the 150 to 250 move. Don't think you're necessarily going to get a test of 150 in the short term because the overall economy is going to recover and there is an EV cycle coming. So that's possibly what happens. You know, I'd be very cautious. I'd be grateful for this move recently. If it continues even better, I'd be following with a stop. And then we're looking at PayPal. Rocky covered this one yesterday. Check out Rocky's show yesterday. New CFO, lots of information on the go. I see that they've pushed up 5.65% today. That's brilliant. Closing the previous gap, back above an 886 of the previous breakdown. 236 has most recently been tested and is being tested right now at 50 spot some change. Testing it right now. This is an entry. If it's bullish, the next target 57. If that breaks 58.90 and the prior monthly high up at around 59.57, that wouldn't be breaking the downward sloping trend, nor would it be entering the long-term formation. You've got a wedge on the go here, which is fantastic in terms of giving us a measured move. It also takes us, you see it there yourself before I even draw it, it all takes us back to the next horizontal level of resistance, which is up at around 67, 68 bucks. And that is also the resistance level Tradespotting is drawn in previously. Look at that, eh? It all matches, which point you're probably going to get a test back down of 63, which is other measured move, and then a move back up to 77. Whoa! I think there could be in for a real good move on PayPal now, especially if the market cycle is changing. There we had that target already, 68. Yeah, so this is what's happening. I mean, PayPal's cool, yo. It may well be that you see these extended percentage moves on Tesla too, and these other charts we've talked about. It's just I don't think that they're going to change their long-term trend just because the market is a little bit more enthusiastic. I think it takes a lot of the pressure off from the short positions, but I don't think it changes the bullish narrative. And of course, the bullish narrative isn't the opposite of the bearish narrative. That's not the way stories work. So in here, $68 target. If I was thinking about a stop, I don't want this thing below 51.78. I would probably use just the prior low now at 50 bucks. Nice round number. If it breaks below that, be very, very cautious. But I'd be, in fact, looking for it to push up from 54. Already a strong move, but I'd look for it to push up to 58. And from there, I want to see it try again 67, 68. That breaks. I'm looking for it to move to 75. 70, 75. And then you're going for a real move, right? That's what I'm thinking about PayPal. You're on for a real move once it gets to the top side of this formation. It's putting in strong potential for a bump and run here. Overall, that's how that might evolve. What's that? That's too small a time frame to make that call. You've also got your flashback down at 43, which is in continuation with the trend. But I'm still thinking this is the place to... This is the long, this is the long on PayPal. Feel like a lot of chocolate on your biscuit. I'd be talking about it in terms of managing my risk with the stops at those areas. 51 and change. If it's a short-term trade and you're already in profit, fantastic. If it's a long-term trade and you're worried about it becoming critical, then $50 just below that for a stop, because it's coming in test 42. Right, that's 16 odd percent off price action. You're not interested in holding 16% on top of any other previous losses, because we can use the money in the meantime. Opportunity cost, you can do better with that lockdown fund as well as not absorbing the loss. For sure we can, right? So you're looking at this thing, yeah. If it does manage to do all that, I'd be building. I am actually, full disclosure. I own PayPal shares. Have been buying it since $55 down, and think that it's a long-term investment opportunity. It's part of my portfolio. I'm looking at it to make its move back up to these areas on the charts. I've got it in my ISA. I'm thinking about it taking profit in at around 93 bucks whenever that is, which is going to happen at some point. 100 bucks, 120. These are all targets that I've got and orders in my account for. Not financial advice, and I'm not a financial advisor. That's just long-term trades, and I've been managing my PayPal position similarly here, thinking about it that way. I've not got staggering amounts here, about being a trader and whatnot. Lots of responsibilities, and I spend approximately 8 to 12 hours a day making YouTube videos. This is what it's mostly a charity service. So apart from to a couple of really good people who support the channel, so thank you very much for you guys. And anyway, right, so we're looking at PayPal. That's what I'm targeting. I'm not trying to show off. I never really am here. So it's like, really, would I? You see my face. I don't need to, right? So 1 hour, 4 hour, where were we? We're at PayPal. We did quite good. We think it's good. We need to manage that risk, but I'm positive about PayPal. I am positive about PayPal. Roku. Oof, nice move. Very happy to see that. 31% plus. Thank goodness, right? The person asked me about this. I care about a lot, and they care about this trade. So this is good to see, pushing up here. In context, you've pushed above the horizontal level of resistance at 74 bucks and change. I'd be very much taking profit. The trade has very much changed. You'd be looking for a test now of support. I haven't broken through that diagonal, and the test is the 236 at 72, or the horizontal at 73 bucks. Bought 80 cents. If you're talking about this as in terms of a long-term trade, the next target's up at 140 bucks. That's a 100% move. The place to enter that is at a test back down at around 63, or if you're very, very bullish, 71 and change, because the whole market's flipped and everything's fantastic. I could imagine there would be divergence on some aspect of this part of the trend. You haven't actually managed to put in any sort of a bottoming formation, and this impulse move to the top side is unusual It's certainly likely to be tested. It comes with a gap, which is very frequently would be filled, and I'd be anticipating Roku potentially coming back down to as low as $60 again. So at 78 spot 30, I'd be taking profit. 4-hour time frame, like I say, it might have flipped. 200 period moving average, you hold that at $75. Great, right? You'll push up and test 100 and rocky outcrop flashes. But I think that'd be a better entry back below, and don't think it's confirmed a trend yet. I think very much you're looking at sideways price action here without getting too enthusiastic about potential. I think you're looking at sideways price action in around this zone until such times you see it move that little bit higher. So 50%, 157. Ultimately, I'd be looking at 157. I'd be managing it with a stop very close to price action. I wouldn't want to see it below $74 even. And I wouldn't want to be holding it if I'd bought it way down there and saw it moving back. I'd want to be very, very cautious of tests of $60, but that might be an next entry, which is good if you're desperate to get back in again. And the target long term would be around 140 and then 140. 100 and then 140. That's pretty good on Roku. Rocky has got a good take on Roku too, so if you are looking for more information, definitely ask him. TSN. Yo. Okay, TSN. Can't argue with Rocky Outcrop Flash, and there is the potential for a test lower at 39 spot 46. Currently trading at 47.38. That would be a big percentage chunk off, but you can see on the 4-hour time frame that it doesn't mind moving big percentage chunks. Daily, you're at a very strong level for bounces. You can see how many times it's moves up from this level already. Probably does something similar. But I'll have to check, because after this most recent occasion, it did fail with a lower high than it had ever failed from before. That in line with downward sloping trend, and now that diagonal meets what was a horizontal level of support could now be a horizontal level of resistance, which could be how price action evolves to the downside. And you see it in around that $37 target, where you've got the next level of support and also that flash on the 4-hour time frame. So evolution to the downside does leave you in at around $40 on Tyson, maybe 38. Daily time frame, you can see that this is a strong area for bounces, but it is of course possible that that's now resistance, not support. 4-hour, let's go down to the 1 hour and see what's happening right here. As you'll notice, this mostly price action first. Technical analysis today, as it has been for a while. So you're looking at lots of drawings which are clouding the picture. How about I hide those drawings? 236, 200 period moving average. It's at a little bit of resistance now. I'd be very, very cautious of this continuation to the downside. Would begin here. It's at a level of resistance with its most recent touch up towards 47 proven to be tough to break beyond, and that also being where it was previously support. So 200 period moving average here, 50 simple below it. Price action likely finds a rejection, comes back down, test 46. Oh, geez, nose. And yeah, so on the 1 hour time frame, I'm not inspired by this to continue to moving up. On the 4 hour, likewise, there's obvious places where it could come back down and test. There's this gap that needs filled at 59.89, and then we've been down the time frame, so let's go up. On the daily, it's still there, $60 target. You know, obviously this thing could collapse completely and utterly. I don't think that you'd be looking at that. The reasoning for the early rocky outcrop, you dismiss these rocky outcrop flashes that come right at the beginning of price action, and then they're not necessarily relevant until you see something that turns your price action in that direction. You wouldn't be looking at that until below $38, and a test of $38 is nearly definitely going to be a bounce. Does it get there this low? I could imagine that would be divergent. You could come back up and test in at around 52, as high as maybe 54, 55. Don't see you getting into that gap at the minute, and I'd be cautious with Tyson. This was the low in around 47, come back up, push around 57. That was a big move there. Hasn't managed to get in the same sort of percentage retracement back up again since it's broken the most recent lower low, continuing this trend. You look left and you can see that prior low at 42, and that $5 off price action here, another 10%. That would be wicked, but it would likely bounce again and put in an oscillation low there. Tyson, a defensive stock, dividend at 4.13%, Fed rates pausing. They're the biggest chicken manufacturer in the world, if you can call them chicken manufacturers. I think they're chicken discoverers. They discover more chickens every year than any other company, and there's something to be said for that, market value-wise. If this thing does break up again, I wouldn't be looking at talking about testing the prior highs yet. Very much be the artifacts within this downward sloping trend. You can probably tell I'm a little bit cautious of Tyson and the potential for it to break down here. I also think that there's an awful lot of potential M&A activity on the cards for these guys, and they do have cash. You're looking at 52, strong resistance, 50% golden pocket, like 50 to 52. That's what you're looking at targets from this move. If it even pushes back above 47 itself, very dubious. And I'd be looking to manage this. If I was at risk in any one position or overall, I'd be looking to reduce all of them and or those that are not doing strong. There's obviously this natural idea that, you know, if one position is worse than lots of others and you're trying to manage this like situation which seems awful everywhere, then you would, you know, try and fix the worst position, or, you know, some people hold on to the worst performing stocks when what you want to be doing is holding on to the best performing stocks. Now, that doesn't mean the ones that are performing least badly. It means the ones that are performing the best. Right, so I'm wondering if this is helpful for the people watching along. I definitely know that I think that Tyson's a little bit dodgy at these instances here. I know that long term it's fine, but if you're worried about it on a margin count, then you definitely don't want it slipping below 42. 38 is probably a really good entry on Tyson should it get there. And I mean, at that stage, I'm talking about for 100% move on price action. From here, there's still a strong danger it could push down to 42, and from there, it's danger it could push to 38. It probably bounces at both of those levels, but until such times you see it on the weekly time frame pushing back above $52, opening and closing back above $55, then you're not targeting those moves to 72 and 83 and then 94, which is what will happen eventually. You're still looking down, testing those areas of support below. That's still what's likely to happen. And with this thing pushing up 2%, I don't think that necessarily gives anybody like great flexibility with regards to managing their position yet. I think you need to see it push higher, 4-hour time frame. You have got this move to the top side at the minute today, and if it backs above this 50 simple, it'll push towards $51. $51 is a strong area to manage your risk. You know, that's why you'd be taking take profit there, to manage a risk, even if the position was a little bit underwater. I mean, maybe you'd be managing it. Like, you can't even enter here to bring the entry down because it could drop to 38. So the overall, you're looking for it to do you a favor and move to 51, where you can take profit in case of the chance of it coming back down to 38, which is very likely on Tyson. So that's Tyson, and now we're talking about QuantumScape, QS. Oof. Come down, filled that gap. Lower low. Up to the weekly. Great. Right, so 50 simple period moving average, it's provided resistance at one stage and then was completely ignored on the next two occasions. Price went through it. That was a higher low. This was a higher high. This is a lower low. So the trend ambiguous on the weekly time frame. 8.35% today. Good to see. Everything's bouncing quite hard because I was right on calling SPY. I'm so proud of that because so many people were saying it was going down, and so very often I get these right. So I'm happy about that. Right, so that gap has left diagonal resistance, which is still true. These horizontal levels are going to be important for a while. Drop these on. This is the first one. It's also a 50% retracement, and that is the target. If you manage to break this guy at 650, gap fill. I don't think that's as significant as the golden pocket because it's at the bottom of another gap, then gap fill, right? And then your 886, which is definitely going to be where people look to go if it gets very bullish. Right, so this is the targets to the top side on QuantumScape. The way that you would first manage risk is by price action making its way to a 236, a 50 simple period moving average. And at that stage, I say a first target, but that's very, very likely to be resistance short term. And I say short terms, the daily time frame, it won't be a while before it even reaches there. And ahead of that, you're at a resistance level. Looking left, this is the candle closing at around 550, which price action then wicked higher, failed to break above resistance, which was previously support, and started what was a continuation of quite a potentially horrific downtrend. So until such times as you break and open and close daily time frames at least twice, if not three times, above 550, is still terrible, despite the fact that it's up 8.64%. Even if it goes on double-digit percentages, until it open closes, it's still negative. So I'd be looking to manage that position by reducing it if it was causing me risk at these levels. If I was targeting a positive move and I'd enter below, then I'd be hoping to have my stop moved up towards 540, and I'd be targeting 620, 6 spot 30, 236, and a 50 simple period moving average. Downward sloping diagonal comes in advance of that, so you might actually be looking at the prior weekly high at $6.10, and at 550 already. It's a significant percentage move from here to there, but the trade entry reasoning was back at around 510, 520, and so is the potential retracement ahead of that move. So I'd be very, very cautious. 4-hour time frame. Do we see a flashback below? No, we've got one right where price action is. So again, another reason why you could see volatility and a pushback down again. I'd be careful here. Gap below, it's filled at 515. Of course, it could come there then. 1-hour time frame. Gap quite obvious. The move back up also opening now, pushing back up after a gap to the 236, holding above a 50 simple period moving average. If then it pushes up, it could well be that you see it go all the way at $6. And yes, this could be a bull flag. But you've got a negative slope on both those moving averages, and every other time frame's against you. And this impulse move is reflective of a couple we've seen across the market, which is likely to do with shorts reducing their risk rather than it being a fantastic long-term buying opportunity. So this is a good time to manage risk on these stocks rather than an excellent entry opportunity. QuantumScape, we've looked at a number of times, has got a lot of different things going for it, but the trend isn't one of them at the minute. And on the even less on the daily time frame, you've broken below these important lower lows. This is putting in all-time lows on price action in at around $5. That doesn't necessarily speak to opportunity when you've been in the face of such a strong downward sloping trend. And it may well be that you're reading. Yep. So nothing positive to speak to long term on QuantumScape yet. I'd want to see it perform significantly better once it's exceeded 640, at which point you'd be looking at long term moves, and you could see it getting 100% move from there. So until such times as it's established itself above 640, I wouldn't yet be positive on QuantumScape, and I'd be very much managing my risks at the moment for these good moves in the stock market, relieving some of the pressure. Now we're looking at UPST. PST. I'm aware of the fact that each of these stocks we've looked at today have had strong thrusting moves to the top side and would have presented excellent opportunities to make many versions of double-digit percentage profit throughout. So taking profit on these stocks is so very crucial to your long-term portfolio's health and saves you from having to come back and the hopes and dreams that make you hold on to positions after they go through your original targets. They are hopes and dreams you will achieve with new trades, which are brought to your attention and seem more real because you've managed to achieve something, and that achievement has been accomplished. The trade, if it's still open, could be representing a liability and a risk to those hopes and dreams. So while it might make you think about them more, it's because you need to close the trade and get back to work, taking profit, making sensible entries, building a long-term portfolio. So you're looking at this thing with a gap up at around 44, closed around 46. UPST thrusting moves to the top side. You've got this downward slope in broadening formation. Price actions come up and tested that target. We drew a target in on UPST. I must have done this recently. Because it's right at the target, $26, $27. This take profit as well, 8.48%. gap below. It probably does come back and test that in at around 24.2 off there, right? That's 8% off price action. Everything that's put on today it could lose. Probably does. Hasn't broken out of the downward sloping formation. Hasn't managed to put in a higher high. Recently put in a lower low. Sure, it's pushed back above a golden pocket, but it's put in a gap. It likely comes back. In order to close that, it has to come back below prior weekly high, push down towards the prior daily high. That's in the context of an already established and very, very strong downtrend. It could then go on and create lower lows, come down 19, maybe even down to $17, and that represents a better long-term opportunity to go long. If you are looking to go long, then price needs to recover back above a 50 simple period moving average, establish itself there with a 200 currently orientated to the top and approaching a 50 simple itself with a negative slope. So you need to arrest that long-term problem. Could happen with strong thrust to the top side in UPST, at which point you'd be seeing it up at 47, 44, 47 bucks. Even then, it hasn't managed to change that trend. Probably comes back and tests those artifacts in at around 30 bucks and then moving higher, and you're getting long-term positive moves on UPST up towards 73, 100 bucks and further. That's possible. But at the moment, you need to be managing your risk because it's at a tough level of resistance. It's below, price action is below the 200 period moving average, itself below the 50 simple, which is approaching it at speed and probably going to be a death cross. That's the daily time frame. And that's why prices, part of the reason price actions come back up to test these areas. And so the trade that's about to evolve will be very different from anything that's just come from before. And so I'd be managing risk and trying to get out of a trade that was currently on to position myself to take best advantage of price action's evolution from this point onwards. Whatever the resolution is with that death cross, which looks to be price testing towards the top side of it, but you know, the sensible thing is to manage risk with this horrible profile below. And that meeting a Tradespotting line in so many different ways. And it's right in there in a little drawing we've drawn. So I'd be very, very cautious there. 1 hour time frame. Wow, look at that. It's just so good. Right, so you're at the 200 period moving average. The 50 simples back down there. You've reached a golden pocket, having held the 2-3. So this is all overwritten. All over this is huge, huge risk. Take profit. Take profit. If you're asking, but I want to get in on UPST, then down in at around 24. And even then, it's not confirming a breaking through the trend. That's continuation likely, probably testing around 20. And long term, if you're super patient, then the area to look to would be in at around $17. If you can get a bounce in at around these levels, might get a bigger percentage move back up and test, you know, these sort of highs. If price action comes down, tests these lows. The reaction could be to test these highs or these highs. $22, $27 from 17. That'd be what you'd be looking for. Long term, be looking for moves up to around 34, 43, 77, that sort of level on UPST. So it's very important to take profit, and it's very important to follow with a stop in profit. I know that it can seem laborious, but really it's not. It's fun. It is fun. It's money, and it's yours. Take it. It's yours. So we did that one, UPST, AHT. So there's a lot of potential here because of the rate pauses. I see that's made a huge move already then. 18.5% today from 190 plus up to 230 plus. This is huge. Huge, huge moves. So you'll be aware of what's happened with rates. The Federal Reserve has paused them for the second time in a row. That's the longest rate pause since this rate cycle began. They talk about a soft landing. If you've any experience of flying planes, you'll know that after a plane makes a soft landing, that's not the end of the story. You still need to tap those brakes, and there will be likely another rate rise, partly because it's in line with the Fed's own dot plot projections, and also because it's true to say that the Federal Reserve's efforts have been to dampen demand in order to give supply side space to reorganize and time to meet the influx and increase in demand through monetary stimulus. So there's twofold: restrict the money supply and give supply side space and time to recover so that overheating and extreme inflation doesn't come back to the markets. The only reason that the markets themselves haven't managed to crash is because the labor market has held up so well. Part of the reason for that is the huge levels of immigration we're seeing across the world right now. And it's true to say, whether your politics like it or not, that your country if it was a Western society, was very, very close to economic collapse and was saved by immigrants in the last few years. It's also true to say that if the economy is to recover and Western society is to maintain the world order as it stands, that will be because of immigration. And that addresses huge problems with demographics, but more importantly, the massive productivity crisis that I've been shouting about for years. It's not a question of demographics. It's a question of monopolistic economics and policies that restrict free markets in our domestic economies, because we are run by a bunch of incompetent idiots who don't understand the first thing about how to run a business, never mind a country. So there's been a severe degradation in the level of politics that all societies in the West face recently. We are lucky that people are immigrating to and appreciating the cultures in which we live, rather than being able to hold them up as beacons of democracy recently. This is AHT. It's made its move back to the downward sloping resistance in the diagonal. It's where we would hopefully be able to manage our risk. It'd be where we would take profit if we entered in it around these targets at 198. I've got marked on the charts here. And so your targets, your profit-taking targets, you've reached them from these entries. You've had a potential bottom information here with this most recent flick. That was probably bullishly divergent. I can see then the rates have paused. It means that dividend investments, this one is not paying a dividend yield, but it itself is part of a real estate investment trust, and so it's a preference share. Has a huge potential to go up when the rates change here. Is this the preference shares? Certainly have them. So what it means is rates have paused, potential dividend investments, which this is attached to, increase in their attractiveness, and then certainly the short pressure comes off, which gives a little bit of relief in price action. But that doesn't speak to a change in the trend of the price chart itself. All of these assets will be determining their own attractiveness and subsequent market sentiment based on their earnings reports and how well these companies are able to capitalize on the changing market dynamics due to the increasing money supply. So for example, you're looking at companies like AMC, who've managed the pandemic really, really badly as a business, compared to, say, Warner Brothers, not obviously a direct comparison, but who managed to weather the pandemic and post-pandemic recovery in such a state that they've had a massive amount of positive cash flow, and they've got the potential for huge strategic initiatives, which could be, picking the bones off failed enterprises. I do think AMC's got a lot of potential at the minute to push back towards $35-40 and put in a 3-4x move since the entry we had in around 7, 8, and 9. But I also think that, if you're looking at companies performing well under the current conditions, it's those that are able to grow from a proper recognition now that the Federal Reserve will be pausing rates, money supply will not be as restricted, and the economies will be getting a little bit back to a little bit of velocity. The world is not going to crash. And those companies that positioned themselves for catastrophe and exploited shareholders over the last couple of years, they're going to get weaker as the strong get stronger. So a lot of long-term considerations for people's portfolios now if you're looking to become a more wise and mature investor. AHT, this offers long-term spectacular opportunities. Whether it's the time to enter now is a totally different question. Now's a take profit opportunity at 230. I think really price action comes in and puts in a long-term bottom information on significant timeframes here. 4 hour, you're not seeing that. You're seeing a continuation of the trend likely, and price action very much presenting a risk. If it does break above 241, then you're targeting up towards $3, 60 cents on two. That's huge percentage moves gain still left on this thing. And if it breaks there, then I think the sky's the limit, right? It's broken the trend. This stock doesn't necessarily only go down, but if you're to look at this, you've got a flash at 354. That's going to get filled. You've got a gap at $42. That possibly, that's the 2618 extension too. If the market has changed, cycles are changing. Long-term investment, AHT, fantastic. 18% today though. I'd be very cautious and I'd be taking profit and managing my risk for sure. I'm so glad to see some of these things moving. EN. ENPH. How long have we been at this video? Jeepers creepers. Right, ENPH. 2.16%. This thing's not doing as well as everything else we've seen recently. Phase energy, electronic technology, semiconductors. Oh, I see. Right. Okay. So, yeah, semiconductors. Super dodgy investment semiconductors recently. Yes. So I would have been well still staying away from semiconductor firms themselves right now. There was obviously a big uptick in II, and a lot of people thought that would transfer through to the semiconductor industry, but it itself is under a lot of geopolitical constraints. And what did I just drop? Like, I can't go back in time, obviously. I'm looking for I've got a fib there already. Right, so it's at a 236. Here, it's at a bounce level. You had to go up to the weekly to get away from all the gaps. And this is a potential bounce. Very extended move through support, and likely the area you're looking back to is around 100, 115 on ENPH. This is the area it bounces. If it doesn't bounce here, like at 74, if it blocks below 74, the next target's 50. So I'd want to get the heck out of ENPH if it didn't. It probably does bounce. But if it does drop below 74, I'd want out of it. I'd want my stop there. I'd want out of it. Long-term target, I'd be taking profit at 115. I'd be taking profit again at 163. And then I'd be managing the position going forward with stops beyond previous pullbacks, and maybe be taking profit again at 278 and 330 if it got there. But it very much looks as though this thing could roll over. And just because it has a reaction here, if it doesn't mean that it's going to be bullish again. I don't think it is. I'd be very cautious. I'd manage it, my stop with my loss with pullbacks. I'd push it to 94 if price brought above that level, and then I'd put it to 115 if price pushed above there. I wouldn't want to be in this long term. I think there's big problems coming from the semiconductor industry, and I think that long term you'll likely see ENPH come down and test $16 again. That's what I think's happening on this thing. So this is where I'd look to re-enter potentially, and that would be only looking for it to bounce up to the areas we find it at now, which may well end up being support now and resistance long term. So I'd be very cautious of ENPH. Down to the 4 hour again, like lots of little gaps to aim for above. There's that. Look, it's coming. There's Rocky Outcrop Flash at that level. Yeah, this is a really good one for an entry down there. I'm going to be proud of seeing this hit those targets. Boop. Getting a message. Right, so you're looking at this, but hopefully filling its gap, pushing up to 90, and then the second in at around 116 on the 4 hour time frame. I would not be targeting 165 from here. I'd be taking profit and managing that with a stop with pullbacks, because I think it's going to roll over and fall down at $21. That's awful news for semiconductors. Don't know exactly what it is. It's going to be pushing it quite so low. Back up to the daily time frame just to double check if it wants to give us the double check. You have got those gaps there. 236 at 93.36. That's the first area where it's going to really struggle. I don't think breaking there is very positive, because at 116 it's got the true test of the previous level of support, which is also likely where it breaks down now, finds present resistance, previous support, top side of a gap, 50% retracement. Any higher, you've got the prior monthly high. Don't think it's getting there, and I would anticipate this thing finding resistance and breaking down again. That's what I think. So ENPH, manage your risk, get the hell out of it. Even if it pushes to 116, in particular, up at 116, get the hell out of it. That's what I'd be thinking. Thanks very much for watching. Has this even worked? This video, is it still recording? Seems to be. Although I see very little price action on the screen there. I hope I managed to get it on earlier. Okay, so this was a video going through everything I possibly could today to help those people who I was most able to under the circumstances. This video was possible because a number of those tickers came in as a fax request, that is, using the links in the description below, which supports the show. And because they came in, I was going to make the video. I decided that I'd put the effort in to cover all these other tickers, which I know various people who watch along hold and invest in. So I hope it helps you. And it's part of my efforts to really help you change your portfolio. And frequently they make double-digit percentages in just a couple of days, the things I talk about. But if you don't take profit, or if you're aiming for those absolute topside targets and aren't following with a stop loss in profit, it can often be that an oscillation will take that thing back down. It'll take it to an entry that makes you worried, but maybe not me or other people. And I might have moved on to talking about other things. So you might feel like you can't ask me, or that it's not fashionable, or it's not interesting. But that's not the case at all. I'm happy to talk about any ticker that you're trading or worried about or think excited about, of course. And I'll do my absolute best to improve your portfolio and get you on the right track. And everybody who watches me and supports me this long into the game, I'm here for you forever. So you don't need to worry about asking me for help. I'm here and determined to make you the best trader you can be. So you're going to have to tell me when you've got any insecurities, right? And I'm your coach. I don't judge you. There is no problem that you're likely to face that I haven't had to overcome. And I've got advice and the benefit of my experience. I'm willing to share it with you. So engage with me more, right? I'll help you as much as I can, no matter who you are. And we're going to get your portfolio improved. We're going to turn you into a massive success as a trader. And you're going to in turn support this show. And it's going to become the place to be for people who want to change their life. And we are going to be known as the best trading group in the world. I really recommend you watch Rocket Crop's video yesterday. It can make you money and can help you with some of the things I've been talking about here. I've very much focused on price action first technical analysis, knowing I've got lots of tickers, and didn't go through oscillators and indicators off panel that might give us context with regard to momentum. But you can take my experience as a substitute for that. I already know what I would have said. I'm trying to help you. Thank you very much for helping me. I really appreciate it. I've got another video coming out today. It might take a while to get around to it because I've got other responsibilities I need to meet. My full-time job is taking care of my dad. I'm a carer. You know, that's my full-time job. That's not who I introduced myself as on the date, but it's who I am. Next, I'm a trader. Next, I'm a YouTuber. And most of my time, in fact, goes into you. So please, let's do this. Let's really do this.